morning, and this is Paul Rankin with VSA Capital's Morning Miner podcast for today, Monday, February 3rd. We hope that everyone has had a very nice and constructive and pleasant visit at the VSA reception down at Indaba, Mining Indaba in Cape Town, as Mining Indaba gets underway in earnest here on Monday, and this is the news which is out today in the mining space. Most of it reflected with companies that have operating activities down in Africa, we notice. First of all, to say that we have show that Mkango Resources, which is the dual quoted magnet materials mine developer and magnet reprocessor planner, is with the announcement of a closing of a 2.34 million sterling placement, where they issued just over 29 million shares at a subscription price of 8 pence per share. Plus, there are issued warrants for the broker in this particular placing as well, and the net proceeds of this particular subscription will go to its ongoing recycling development costs in Germany and the UK, as well as general corporate cost purposes. There was also a news release out on interim update for production with Harmony Gold, which is the JSE listed gold producer. They report that better than expected milled grades and lower all-in sustaining costs of being achieved, such that they are now predicting they will come in at the upper end of guidance for the year, and also that they are ahead of schedule as far as their guidance under their plan for this financial year. Now, they do also say that they will have the actual interim financial results to be released around March the 4th. On the other hand, we have an announcement out from ASX-listed gold producer WEstgold that they are going to miss guidance that they had put out earlier. In fact, rather substantially miss guidance, something between 10 and 20%. This due to slower than expected production ramp up at both of its operations. Post-merger, their production guidance was predicated on simultaneous ramp up of the Beta Hunt nickel gold mine to 2 million tons per annum and the Bluebird South Junction section to 1.2 million tons per annum. Both of these are going slower, primarily due to engineering issues and not due to mineral resource issues. In other words, it's the operating costs and not the estimate on resources concerning volumes or grades. So they're expecting something between 10 and 20% lower output to no more than 350,000 ounces. And also that their all-in sustaining costs then will probably be 10 to 20% higher at no less than Australian $2,400 an ounce. This effectively have to say in comment that would otherwise negate some of the good benefit that we're getting from the rising gold price, which in this late last week hit its all-time high in US dollar terms finally, to test over $2,800 per ounce. It did retreat back from that later in the week, and it is being led essentially by the slowing of the US dollar, or weakness in the US dollar. But it is also trying to attempt to test $2,800 again this morning. That's all we have for you today, and we hope to see you again tomorrow. Thank you.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.